This conference will now be recorded.
All right. Again, good morning, everyone. It is Wednesday, April 13th, and it is Easter week with snow on the ground, and it's, hey, Central Oregon weather. You never know what to expect. A lot of stuff to cover today. I'm super excited about it. It was a wonderful week last week, spring governance recap coming up here. I was in Salem for 3 days, and I have to say there were a lot of people who came over to Salem. It was just nice to start seeing people's faces. It was nice to see people, uh, without masks on and people just enjoying being together. Though there were plenty of people who attended the governance meetings via hybrid methods, which was great. Glad to be able to handle that too. And it worked out really, really well. So I'm going to jump in right away. First thing I wanted to talk a little bit about is the governance restructuring. What is going on here with the state association is over this last year, they've been looking at ways of potentially restructuring how they operate. Just to give you a heads up, the board of directors for the state has well over 100 people. I believe it's 116 people who participate in the board of directors for the state. And these are people who are obviously representatives from the different local associations around the state. That's a really unwieldy group of people. It's to get 116 people together as a board of directors to get people to be able to participate on discussions and things like that. It's just crazy. So over the last year, they've been looking at ways of maybe changing that. And that was presented just with the thought process, just to start the ball rolling. Nothing's been signed yet, but maybe knocking the 116 people down to 60. Some board of directors around the nation actually operate with maybe 15 people. Just to give you a heads up right now, the executive committee, which I'm serving on this year, has probably 12 people on it, though the anticipation is the 12 people will be knocked down as well as part of the governance restructuring to potentially maybe 8. So they're looking at doing a lot of major restructuring of how the association operates. So it's just something to make everything a little bit more productive. But now to move on into the principal broker forum, which I don't know if any of you had an opportunity to attend, because there were opportunities part of the principal broker forum to take 2 hours of CE credit. It was one of those great participatory forums that I've attended for quite a few years. This year I actually was the one who was chairing it, so it was really kind of an interesting experience. And we did a tri-sider poll out there, and if you guys had received that, you had an opportunity to bring in topics. We had actually a total of 16 topics that were presented to talk about. We only got to 11 of them just because we could only do so many in the 2 hours. But the first one was about love letters. Again, we now know that they're legal again, and so people were wondering, what can we do? How's the best way of handling love letters? And I know a lot of you guys have also asked me that point blank, how do we handle love letters? Just to give you a little heads up, there is a wonderful tool from Oregon Realtors, so I'm sharing this with you here. This is on the Oregon Realtors. You go to their homepage, and then you go to the risk management tool across the bottom here, across the top here. There's all kinds of great tools connected with risk management. And the first one, because it's the most pertinent one right now because of the change in the law and having the injunction placed on the law, people are wondering, what can we do regarding love letters? And here is a series of information on how to handle it for sellers, for buyers, and remembering that obviously your seller can pick any offer that's presented. They have nothing that can keep them from accepting one offer over the other, provided they do not do anything to violate fair housing. And that's really, really important that we, as people who are representing our sellers, do advise them, here's our multiple offers. I'm going to put the multiple offers, all the pertinent information, in a spreadsheet for you, and we do have that as part of our forms that are available on SkySlope. Just for you guys all to be aware, we have a spreadsheet there that you can fill in the blanks on You present them to the sellers, but also if a buyer's agent presents you with a love letter as part of their package, you can tell them, like, here is a love letter. I can't say anything about it because I can't do anything to violate fair housing. And seller, you can opt to receive these or not. And that would be something that you should really do when you take a listing. Tell the seller what a love letter is. Tell them that it was banned shortly within the last year with the Oregon State Legislature, and that ban has been put on hold because there was a lawsuit saying that was violating fair housing, not fair housing, freedom of speech. It looks, according to the Oregon Realtors, that this hold on implementing the law will be upheld by the appellate judge. So it's probably this law will go away. But again, the anticipation when you're representing a seller and they receive love letters, let them know that when you take that listing, tell me whether or not you wish to receive these. And if you do, I will bring them in, but recognize you can't make your decision based on anything that would violate fair housing. So that's up to them. And again, if you're representing a buyer and a buyer wishes to write a love letter, you are not to advise them how to write the letter. On your behalf, you can present the information about the quality, your qualification to purchase the property, specifics about the property that you like. But understand that the seller may not want to receive that love letter, but if you wish to write one, I will send it on with your packet of information, recognizing that the seller can't make a decision based upon fair housing. Does anyone have questions about that? Because it led to a pretty long discussion with the Principal Broker Forum. Any questions on that? I think it's pretty clear. Obviously, love letters can make the difference sometimes when someone is making a decision. If there's no other offers on the table, obviously writing a love letter in which your buyer can only offer what they can afford and not necessarily the asking price may make a difference to a seller. It may not. But again, there's protective classes of Oregon, protective classes in fair housing, and here is a chart on this. And all this information I will send in a follow-up email to everybody along with the link to this meeting today. So I will send this to you as well. But this is the fair housing protected classes in Oregon. You can see each municipality may have additional sources. Here's Bend, who we all have to be very careful about, making sure there's nothing that we do to disenfranchise anybody who's in a protected class from having an equal opportunity to purchase a property. It's real important. So that's one of the things to think about too when you're representing clients. Okay, so if no questions on love letters, I'm going to move on to the next thing which was discussed, which was wholesalers engaging in licensed real estate activity. Can a licensee engage in this? That's an interesting discussion to think about. Wholesalers. Who are wholesalers? Now, just to give you a heads up on that, this was also discussed in the Business Issues Key Committee, and we're actually going to be probably formulating a task force to discuss it. To give you a heads up, we had an incident within our own office connected with a wholesaler. Now, what is a wholesaler? That's someone who is looking to purchase property. You used to see we buy ugly houses, that sort of thought process. They go directly to a homeowner, say, we'll buy your home, and then we are going to sell it, and you won't have to pay any commissions. And we're gonna sell, obviously their intent is to make profit on it. Now, to give you a heads up as to what we had happen within our own brokerage. We represent a buyer on a property in which they entered into contract to purchase. The listing shared that the offer should be made in the name of the seller, but understand the signer will be a power of attorney, which is normal. We've seen things like this happen before. Well, we got into contract on it, and our buyer's doing their due diligence on the property, and then out of the blue, we received this 2-page document from the power of attorney, which is basically saying that they need us to do the assignment of our offer to them. And it's like, what is this? I've never seen anything like this. Obviously, the broker talked to me. I got on the phone immediately with the escrow officer saying, what is this? So what's going on here? Well, this company is a company out of Austin, Texas. And what they have done is they have entered into a contract prior to listing with this seller, basically saying, you know, we're going to sell your home. You won't have to pay any commissions. And I mean, we're going to buy your home / sell your home. And you won't have to pay commissions, but you just have to let us negotiate all terms. And basically what they want to do is like a double. It's a very strange situation. The way they get away by saying we're not going to pay, you don't have to pay commissions, seller, is because they pay the commissions. So they have agreed to purchase this property from the seller at obviously a price that does not include a full commission. And the ultimate goal is they're going to make money, but they flip it. So they really never enter into contract. They never buy the property. They basically found us through their listing agent. They found our buyer, and what they do is we would assign our offer to them. They in turn would kind of like simultaneously close on it. It's very complicated. When I talked to the escrow officer, which is actually Western Title, they said they had to escalate this up to their legal department, and their legal department said, we cannot close this in escrow. We can absolutely provide the title insurance because we've done the research. We know we can make sure this is free and clear title, but we can't close it unless we would rewrite the offer and say the title to be in the name of our buyer and or assigns. Of course, that would disenfranchise our buyer potentially. So of course we had no interest in that. So, and again, I said, this is a third party issue. We have the seller here who got involved with a buyer, or excuse me, a seller with a third party out of Austin, Texas. And they have some sort of contract here, which really does not involve us whatsoever. We found out there is one escrow company somewhere on the coast, a title company, an escrow company you probably never heard of, who had closed one of these before. But anyway, this is moving its way through the state right now. The way we change this, the way we worked through our own deal is that the seller somehow worked out some way of paying this third party, which we are not involved with whatsoever. And so our offer as written stood with us eliminating and getting rid of this power of attorney who was writing on behalf of the seller. Anyway, that has how we worked it through for ourselves, but this is becoming a new issue in the state. So with that in mind, there may be some regulations, and we're going to talk about that in just a little bit, but just to give you a heads up about it. Another topic that we talked about at the Principal Broker Forum was higher bar for real estate brokers in Oregon. And this I've heard about every single time we go to Principal Broker Forum. There's a lot of frustrations in the state. And of course, the people who attend the forum are people who do things the right way. But the problem here is that there's plenty of people who do not maintain their education, and they are not up on how to behave. They do things that are questionable. Sometimes are they potentially violating the code of ethics or the Oregon statutes, and there's a lot of concern with it. So how do you raise the bar in the state for professionalism within the industry? And you know, that's been an ongoing problem for a long time. I know the agency implemented advanced practices for brokers, which we all know all brokers have to do with their first renewal. They now also have advanced practices for principal brokers, for people who have become a principal broker. Their first renewal after they've gotten the principal license is required a class in advanced practices there. The thought process here is, and I've seen this in our own industry, when there's an issue in a transaction that requires me to speak with the principal broker of another office, usually we can work it out. Usually, I mean, we all have the same thought process. We want a successful closing, or if we need to terminate, a successful termination so that all parties can go their own ways. And if a closing, all parties are satisfied in the closing. And we usually work through these things. The times I have problems are typically when it's a very small office. It may be a brokerage of 1 or 2 people. and the principal broker is the one who's causing the problems. And so it's challenging to talk to a principal broker who's off somewhere doing their own thing without maintaining their level of professionalism. They're not up on the statutes. They're not up on how we behave. And that is a hard thing to work through. And so that's, I think, a lot of the frustrations for people when they're working through lack of professionalism in the industry. So just to let you know that that's the thing that people are seeing across the state, and it's been an ongoing thing for a long time. Next question is, are we expecting to see a wave of low appraisals? Now, the broker who brought this one up for questions is experiencing that. They're seeing low appraisals in their market. We haven't yet had a lot of sale fails due to a low appraisals, but there are some markets in which they are. And so just give you a heads up, we may start seeing some things like that. Another problem was the frustration over a lack of response from listing brokers who don't respond to offers. You have multiple offers. They say that when you follow up and the listing broker says, well, my seller just elected to let that offer expire. We went through another offer. Well, the frustration for a lot of agents are, well, did you even present my offer? Was my offer considered? Did you show it to them? Because we all know state law requires all offers be presented to the seller. So how do we know from our buyer that we can assure our buyer, yes, your offer was presented? And even if your seller elects not to sign the last sheet, and they should sign the last sheet of the offer at a minimum, checking the box saying that they reject the offer. That's fine. Now our buyer now knows that this offer was rejected, but they have clarity that it was at least presented. But say you have a seller who says, I'm not going to bother with any of these other things, just let them expire. Well, we as agents have that space on the last page where it says when the offer was presented by the broker. You should at a minimum fill in that line that says it was presented by you as the listing broker at this time for consideration, and send that back to the buyer's agent who presented that offer. So at least they have that confidence that you as listing broker presented their offer, even if your seller won't bother to sign that last page. But I can't imagine why your seller wouldn't if you let them know that we are obligated to let the other side know that at least you looked at their offer. Any questions on any of this so far? I mean, I know I'm, as I said earlier, preaching to the choir here, but you guys are top agents and you do recognize this stuff, the importance of professionalism. Next thing.
Question.
Yeah.
Sorry, can you hear me?
Yes.
So this is Julie. I was just wondering, you guys usually present each offer immediately when it comes in, or if you're kind of fielding several, do you kind of wait until maybe the end of the day to see how many come in if it's a multiple offer situation?
A good question, Julie. What a lot of people will do is they will note on their listing how offers will be presented, because we are obligated to present offers promptly. But if our seller says, bring me all the offers Sunday at 5, that's what we will do. We'll bring them all to them on Sunday at 5. And we also put that out there in agent remarks so that all agents know that their offer will be presented Sunday at 5. The problem comes down when agents, when you're doing that, presenting them all offers at a certain time, but it's not known to the agent who's presenting the offer. So I think making sure all parties are aware that my seller has authorized me to present all offers at this point in time. But say your seller does want to entertain each offer as they come in, you can say that there in agent remarks, seller will review all offers as they come in. You can also say, and that's part of the frustrations too with the principal broker, which brought up, what about that line which is say all offers will be presented at this time, but seller reserves the right to accept an offer prior to that time? Well, that's a frustrating thing from someone who's a buyer's agent, but ultimately it's the seller's choice. And when you have your hat on as representing the seller, and the seller says, I would like to see each offer as they come in, you do that. And if you have an awesome offer that comes in and the seller says, hey, I don't want to look at anything else, I'm very happy with this offer, I want to accept this offer, then if you've had it advertised in MLS that this is what your seller will be doing, your seller has that. I mean, that's unfortunately in the situation for buyer's agents. It's hard for them to judge, because I know in some cases buyer's agents will wait until the last 2 hours before they present an offer, on the off chance there's been no other offers that come in and now their offer will be the only one, or they can find out 2 hours prior how many offers do you have, and they can then adjust their offer accordingly. There's a lot of different games that are played right now. It's hard to know what to do. Did I answer your question, Julie?
Yeah, no, I was just, thinking going into it, what would be the most appropriate way for me to guide them? Because, I mean, if it's in a kind of a hot price point, just to make it fair for everybody. So, yeah.
I think personally, if you have a property that's marketed at extremely well in a strong seller's market, giving to a specific time for all offers to come in, honoring that. So when you have that line here, seller retains the right to accept an offer prior, yeah, but advise your seller that you're more likely to get higher prices and better offers and more offers if we wait until this day at this time to, at that point, review all offers. And at that time, if you have a listing that is very desirable for a lot of people, you may get a lot of offers, and you might get a bidding war that could jack the price up higher, so your seller will have better options and potentially more money, better terms, all those things that would be good for them.
Okay, thank you.
You're welcome. Okay. Any other questions on that before I go on? Okay. Next thing was, we talked about liability of acceleration clauses with no cap. Obviously, when we write an acceleration clause, be sure to have that discussion with your buyer. We have to make sure we do a cap on this so that you don't find yourself in contract on $50,000 more than you can actually afford. So having that conversation, putting a cap on it, is really important. Okay, lender commitment to sale agreement terms. Now we're starting to see some issues with this too. This is something that we had someone else ask about at Principal Broker Firm, but we didn't get to that. Business issues as well. The lender commitment on the terms of the offer. So we're starting to have problems with lenders not meeting the deadlines that are set up in the purchase agreement. One of the reasons why, when you actually work with your buyer to write the offer, make sure you've also consulted with their lender. And if the buyer says, I want to have a 3-week escrow and close on this specific date, make sure that's workable for your actual the lender of your buyer. And if it's not doable, you have to schedule it at a point in time that actually does work. The issue here is, we've done that in a couple of situations, and then all of a sudden the lender said, well, we didn't get it done. Well, say the seller has a backup offer at better terms. The seller is under no obligation whatsoever to extend the closing of buyer number 1 because the lender messed up. And if something happens so that the seller says, absolutely not, I'm not extending this terms, I'm going with buyer number 2 here because they have better terms, I'm not going to extend this. Then buyer number 1 is out there appraisal, they're out their inspection, they're out all these things, and it's not due to their fault, it's due to the fault of their lender. What teeth are there behind the fact we have lenders messing up? It's one of those things that people brought up. We obviously don't have a resolution on it yet. Any thoughts about that as well? Anyone concerns about that? It's an important thing to consider because we are having problems like that right now. We had a situation in which we had to extend closing, and yes, seller was agreeable to do that. But here's another bizarre scenario in which, after closing, a week after closing, the seller came back, the lender came back and said, we need to have an addendum reworked. This is a closed deal. Money has all been dispersed. And they basically started threatening us and saying, if we do not take care of making sure this addendum is redone, we're going to rescind the loan. And I'm like, how in the world can you rescind a loan in which all the money has been dispersed, it's been closed, title has been transferred? I would think, lender, you're going to be opening yourself up to a lot of lawsuits. I had to escalate this up to the president of the lending institution, and they got it worked out. But the issue was there was a problem with this addendum in which they needed to push this loan through to Fannie Mae, and it wasn't in a manner that Fannie Mae approved. And obviously the loan, this should have been caught in underwriting, and it wasn't. So that's the problem in that scenario. We got through that all. Okay. Any questions on the principal broker forum? Because this was a really lively conversation. I don't know if you guys ever have an opportunity to attend these things, but they're really, really good. And I would advise you, if you have a chance, just step in on that, get your 2-hour CECs, and hear how different parts of the state are handling certain things. You might learn some ideas about how to do it better, how you work your own business. Now, the next thing I wanted to talk about, just before we move on to the update onto the market, the business issues key committee meeting. We have at every business issue key committee meeting, we have people talking from the industry. So the first thing which is important, is to find out what's going on with appraisals. And this is a huge change to the industry. When I heard this, it was like, everyone was like, what, really? So we had a gentleman from the appraisal industry, which is now saying that per Fannie Mae, desktop appraisals are now a permanent thing. They started instituting desktop appraisals through COVID because people keeping their homes locked up and doing desktop appraisals, especially when you have large down payments, and so there's not as much concern connected with making sure everything is accurate for the loan. But new guidelines approved by Fannie Mae have approved a hybrid model of appraisals, in which there's a new floor plan program with a mobile inspection app to provide the square footage by a third-party person, not the appraiser. And the appraiser is doing the desktop appraisal, which will enable them to do 2 to 3 a day, which is a good thing to speed up the appraisal process. But then the concern is, who's this third-party person? And when this was announced, one of the members of the committee stepped up and said, yeah, I was caught totally by surprise when all of a sudden this third party, who I've never heard of before, I had no idea who they were, wanted access to the house, because they go through with this app to do the square footage on behalf of the appraiser. So it's a third party person. And she said, I have no idea who they are. Are they bonded? Are they licensed? Letting them into the house, who knows what they're going to do? I would never let someone into the house who is not licensed and bonded. I don't know who they are. But the bottom line on this whole thing, it's new. There aren't regulations in place yet for these third-party people who will be going through the home, doing the square footage and the physical inspection of the property. But Fannie Mae has approved it. It's going to happen. So you may start seeing some of these things happening within your own within your own business soon. And in the case of the committee member, she's from the Willamette Valley area, and she was the first one to have said she saw this in her own listing and was really very concerned about the whole thing. Questions about that? Have any of you seen this yet? See that anyone's raising their hand? Anyone seeing any of that yet? Okay, if not, I just wanted to let you know it's coming, and this is something that will be changing how we do our business here in the state, and actually across the country, because this is a Fannie Mae thing. Okay, title and escrow. They said that they're removing the online notarization is now a permanent fixture, which is really, really good. It's going to help us with a lot of situations when people can't get to a physical signing location, having that available online. However, the escrow representative who was giving this report, she's also an attorney for the escrow company. She said there is a problem if your client has been out of the country for a long period of time. The online notarization will not work. I'm not quite sure why, but it's maybe something having to do with recognizing who they are, if they've been living outside the country a long time. And so still, there's still the option of going to the embassy for people who are out of the country to do physical notarizations for transactions if necessary. The other thing to be aware of, she reemphasized big time, never use free Wi-Fi for anything that you're doing connected with your real estate transactions. Obviously, wire fraud is a big ongoing issue, and it happens all the time. In fact, I don't know how it happened, but my father-in-law just had his computer totally hacked, and someone through his computer got into his Amazon.com account. This is an ongoing problem, so please be careful about all that. Make sure you have really good virus scanners on your computer. Make sure you're very, very careful with this. Obviously, we do not handle any sort of thing for our clients for wire transfers. We let our clients know you will be getting information on that from the title and escrow company. Call the title escrow company and verify the account number with the escrow officer. Make sure you are acting with them, not with us. We will never, ever ask our clients to do something like that. And if someone's hacked our computer and is using our name and our email account to do such a thing, it's not coming from you. So make sure your client's aware of that. And we have talked about the uptick in wholesaling. Lending, in the lending information, that was fascinating. The gentleman who was from the lending institution said that the appraisal gap coverage from deals that they are seeing, 87% of offers have that. 87% of offers have some form of appraisal gap coverage if they're getting a loan. That's shocking to hear. But in a strong seller's market, this is the reality of what we're dealing with. Also, 85 to 90% of offers are over list. That's also the reality of a strong seller's market. There's also, in lending, very, very low delinquencies. As we all know, in an escalating price market, people who are foreclosing, having their loans foreclosed on them, or dealing with not being able to make their mortgage payments, can sell their property, usually pocket money, and leave. We're also starting to see, in this time of increasing interest rates, 10-year adjustable rates showing up again. And also with down payments, there's more family money involved in down payments than there were in the past. I just know recently in our office, we noted where the source of their down payment, it was coming from gift money from family members. So that's happening a lot in this industry right now. A short, really quick thing here on property management. You guys might have seen this as something that came out from Oregon Realtors. There was a study done in the Portland metro area that shows that the rental pool of single-family home has declined 14%. That's over 5,000 homes since the instigation of the Portland tenant landlord rules. And the reason why they focused on Portland metro was because those went in place prior to the statewide tenant landlord rules were implemented with statewide rent control. So Portland has had a longer period of time, and we now have definitive data to show, having instigated this, that it has not increased the rental opportunities, but it's decreased them. 14%, that's a significant number of homes that are no longer in the rental pool. Any questions on any of this? Okay. The thing I need to share with you right now is the potential new regulatory actions that we will be discussing. We're going to be having a meeting next week on some of these trends that the real estate agency may wish to implement. And we're running them through the Business Issues Committee. And I'm pretty excited about this. We're going to have a follow-up committee meeting next week to talk about which of these things we as an industry wish to take on as a task force to say, yes, we think this is important in the industry and something that we need to look at as maybe something to re-regulating. And we will, if we come up with ideas like this, then it will in turn go to government affairs, who will in turn be working with the state legislatures to potentially get a law in place. The new law that was passed during the short session, which now has increased fines in the state for people who are practicing real estate without a license, came out of the fall business issues committee meeting, in which one of our brokers who lives in Eastern Oregon complained about the fact there was an awful lot of Idaho brokers coming over into Eastern Oregon and representing buyers in properties, and which is basically practicing real estate in our state without a license. And there were no regulations really to enforce that. So now out of that, we now have a new law, which now has fines for these people who are doing this. It starts off at, I think, $1,000. It goes up to $5,000, but there weren't any fines before. So this is one of the things that we think will help benefit and help our industry overall. So here's the topics that we're looking at, and I'm super excited about that. So let me just scroll down here. So here's Steve Strode. Steve Strode, of course, is our real estate commissioner. He used to be the Oregon, he came from the real estate industry in that he was the Oregon real estate president a few years ago. And when there was an opening in the industry, he decided to give up being a practicing realtor and went over to become the commissioner. He actually lives in Bend, believe it or not. And I like to think of him as a friend. He's a good guy. He really understands everything and is a good person to have in this role right now. So let me go to the first one that they're looking at doing, which is dealing with commission sharing and rebates. Now, this is one of the things that I think we need to be addressing. We know in Oregon that it's illegal for us to share our commissions with anyone who's not licensed. There are a few other states that are like that: Alabama, Alaska, Iowa, Kansas, Mississippi, Missouri, and Oklahoma. However, there's a number of business models and different brokerages around the nation which promise a portion of the buyer's agent commission to be paid to the buyer at closing. We all know that Redfin started the whole company based upon that business model, and they started in Washington State. Again, there's a lot of them who are doing that now. And we've always had, as an industry, the protection of, well, it's illegal in Oregon to do this, so we can't do it. Now, but there's getting to be lawsuits directed to us from some of these business models, these brokerages, in which they are asking for us to change the law. And also here, he's also saying here, there's an inherent problem, is a historical lack of transparency with respect to buyer's agents' commissions. So it's not required or common practice for brokers in Oregon to use buyer representation agreements. And that was something else I talked about. If we have a buyer representation agreement, we can work with our buyer to have a set commission expectation for us. So if the selling agent is only providing through the co-op, the listing agent only providing in co-op 2%, then we say we work for 2.5%, our buyer would make up the difference by a 0.5 commission. The problem here is, do we want to change this regulation that makes it illegal for Oregon to do rebates to buyers? It's one of the things to talk about. We're going to talk about it at the task force. Does anyone here have thoughts about that themselves? I mean, this is how we've been conducting business in Oregon since I was licensed. It's illegal, and that's been always a crutch that we've used very, very well. But it's something we'll talk about at the task force. The next thing we already touched on was the wholesaling model, and this was something that really was intriguing to a lot of us, very concerned about this, and I know this will be a topic we're going to talk about. Is it, understand it could be a legitimate business model for some people to say, I'm going to find a buyer for you. It's like a finder's fee sort of situation, But if you're going to do something like that, should you be licensed in the state to do it? Because you're basically putting buyers and sellers together. That's real estate, isn't it? So right now, it's not regulated. And so that's one of the things we're going to talk about here too next week. Less license reciprocity and portability. I understand in some states, it's very, very easy if you have an Oregon license to have instantaneously a license in another state. These are Alabama, Nebraska, South Dakota, Georgia, and Alberta. Who would have thought Alberta, Canada? I also understand it's super easy in Arizona as well. We've had this reciprocity agreements with these states for a very long time. However, now, should it be easier to get a license in another state, especially for brokers who say are working on the border? Say you're working in Oregon and you're also working in Washington, or you're working in Oregon and California, or Oregon and Idaho. Shouldn't it be easier to have a reciprocity in which if I have an Oregon license, I can also get a Idaho license, maybe just by passing a test, passing the Idaho test, and not necessarily the entire national test. You've already passed the national test. I saw, Karen, that you had piped up something there. You had written something. Do you want to unmute your mic and tell me what that's all about? What's your thoughts about that?
My thoughts on the getting your license in Oregon. Do you need your license? Is that the question?
No, it's about reciprocity. So say I
believe you need to go through the steps. I did it, and I think it would be too easy for all the people in other states to come to Oregon and sell real estate.
Mm-hmm.
We have a lot of realtors here. We would have a lot more if we did that. That's my view.
Okay, very good, Karen. And that's good. The thought that we talked about at Business Issues is I think as a consensus believe it's important that you obviously pass the state test. In every state you have a license, because every state has its own real estate rules and regs that are different from each other. And so the reciprocity agreements we have right now with Alabama, Nebraska, South Dakota, Georgia, and Alberta, I believe do not require that you have to pass the state test. But in these other states, if you're going to get an Idaho license, you have to pass not only the Idaho state test, but also the national test. Now, the national test is the same across the country. So why do you have to pass the national test as well?
Okay. I see what you mean. Yeah, I think as long as they take the Oregon test, then they should be able to come here to sell real estate. Yep. But do they have to live here?
No, you can. Yeah, you can be licensed in a state. For instance, Sheila in our office, she lives here in Oregon. She's also licensed to do real estate in Tennessee. There's nothing wrong in that.
Does she have a home in Tennessee?
Sheila, do you have a home in Tennessee as well? Sheila? Yeah.
Sheila, that's my concern. All the realtors coming to Bend to sell real estate.
Yeah.
And Sheila, they don't even live in Oregon.
Sheila, could you unmute your mic and tell us? Sorry to put you on the spot there. Sorry, I shouldn't have done that. But no, if you have a license in another state, you pass the rules and regs. If a state says you must live in the state in order to practice real estate in that state, that's a real estate statute connected to that state. But I know that people who work, like for instance, the Columbia Gorge, most of the brokers there are licensed in both Oregon and Washington, and one in particular who I look upon as a friend. She's licensed in Washington, but she lives in Oregon. But she's selling on both sides of the Columbia River on a regular basis. And that's good business practice for her, because her clients are there. They just want to live on the gorge, live on the Columbia River. It doesn't matter what state they're in. I do think when people come to Oregon, because the state test is pretty strong here, you're required to become a broker when you pass the state test here. And most states, you're not that. You're a sales associate. The bar is higher in Oregon, and we all know the Oregon test is really challenging and hard to pass. So I personally think it's very strongly that we need to have, if you're going to have an easier way of getting a license in another state, you have to, at a minimum, pass the state test. But that's my opinion on that.
I agree.
Yeah. Okay. Thanks, Karen.
You're welcome.
Yeah. Any other thoughts about that? Okay, one more here. The initial agency disclosure pamphlet. This is something we're going to be probably taking on too. We all know it's just a document. There's nothing for anyone to sign, nothing required for people to say this is, I get what it says in here. It's just a document we're supposed to pass out. And it requires that we, yeah. Oh, thanks, Sheila, for just back up here. She did a quick little chat saying that she does have a house in Tennessee, but it's not required. So that's good to know. Thank you. So the current statute requires that upon initial first contact, you're supposed to give person a copy of the agency disclosure pamphlet to each party to a real estate transaction. But it doesn't require the intent to create an agency relationship. It's informational, and it's there to let people know about it. Now, the thing is, the real estate commissioner said, the problem with this right now is you say, here's a pamphlet, and they'll say, oh, I already got that. But it could have been received a long time ago. It could have been years ago from someone else. It could be something totally not connected with the current relationship that they're establishing with this new agent. So they're considering a regulation change to identify the person's name, the broker's name, the principal broker's name, to ensure proper record keeping, making this a requirement. That's one reason why it's been one of those things that I know some of you have a habit of having your client initial the pamphlet, and that's a good way of knowing that they provided that to them, and you have a record that the client received it. It's not required right now, but this would be a regulation change to make something like that part of what we're doing with the pamphlet. Personally, I think it's a good idea, but we'll see what the task force thinks about. The next thing would be a property manager surety bond. That is interesting. The problem here is property managers, as we all know, have client trust accounts, and those client trust accounts can have thousands and thousands of dollars in there. If you ever read the real estate agency's quarterly journal, in which they outline, besides all kinds of things in there, here's disciplinary action that's been taken. Often the disciplinary action involves client trust accounts. If you have a bond on that client trust account, if someone has found that the property manager has absconded with their funds, there's a bond in place to ensure that they would get back at least some of their money. That's the thought process. Right now, it's not in practice. It's not there. It's not a regulation, but it's something that they're considering. And I know that builders are required to take out bonds and insurance policies. And so this is something that they're looking at. Any thoughts about this? Okay. And this is another big one here too, team regulation. We all know that there are a lot of teams in the state right now. We are dealing with teams. It is not required that you have a team leader that is a principal broker. The current statute says if you have 2 or more principal brokers associated in the same real estate company, they have to have a written supervisory agreement. But a team does not necessarily have to have a principal broker as their team leader, even though in practice, the team leader will be saying, you are to do this, you are to work with this person, you are to do this. You have buyer's agents, you have seller's agents, you have transaction coordinators who may all be licensed people who are taking direction from the team leader. And this would be a thought of maybe making it a requirement that if you're going to have a team of a leader with a bunch of people who are working on behalf of that leader, that we do have a requirement that they be a principal broker. To me, this makes sense, but it's not currently the statute. Now, there's a difference between a team in which you have a partnership, two equal parties who are working together. That's different than a team leader, and we all know the difference of that. Thoughts about this at all? Questions? Okay, the last regulatory thought process is to have an initial agency disclosure pamphlet for property managers. And that kind of makes sense as well. Property managers are not people who are actually selling property, but they are working on behalf of their principal, and they need to understand they are under an agency relationship as well. So, all right. Boy, that took a lot of time. So I think I'm only going to have time to kind of try to get through this real quick, which is what's going on in the national world right now on real estate. So this is the impact of rising mortgage rates on the housing market. We've all seen this start to happen. We've had our first sale fail due to a change in an interest rate from the point of time in which the buyer started talking with their lender to the point in time which they got into a actual real estate contract to purchase. Rates had gone up, and all of a sudden it impacted their monthly costs of living. And so what is going to be the impact of this? So this gives you a chart of what's happening in interest rates this year. Now, this was as of 3/31. This is coming from Freddie Mac, and we all know interest rates were really, really low just a short time ago, 3.11 up to 4.67. We've actually seen some interest rates above 5%, and I know in investors, the rates are definitely above 5% for investment lending. So we're seeing this trend happen. So here's the chief economist of Freddie Mac. They say mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of the rate increase is likely to moderate. Much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with Federal Reserve interest rate policy. That's what the economist from Freddie Mac thinks. So this big jump up will moderate. We'll see. So what is the impact of rising rates on home prices? So this chart shows, and again, this is from Freddie Mac, it shows when mortgages rates rise of more than 1%. So this is moments in time. So this is back to 93 to December of 94. There was 14 months with had an increase of 2.38%. In actuality, home prices went up 3% during that point in time, because it's counterintuitive. We think that when mortgage rates go up, home prices have to go down because people can't afford the homes anymore. But in historical look at this, it shows that actually when mortgage rates have gone up by more than 1%, home prices have also gone up during the same point in time, at an average over time of 8% during all these points in time. Again, who would have thought that? But that's the truth. But you have to also look at what it does on housing itself. So here's a new chart off to the side. So this is what happened when actual home sales, the number of houses that sold during the home price increase, the interest rate increase. If you look at 93 to 94, home sales went down 11% during that time. People couldn't afford the homes, so they just didn't buy. January of 96 to September of 96, 8 months, home prices went up 2%, interest rates went up 1.2, home sales dropped 2%. The anomaly here is June of 2003 to June of 2004. Interest rates went up 1%, home prices went up 13%, home sales went up 2%. Now we all know this was the run up to the housing crisis when lending became no doc loans. You walk in the door, sign an app, you got your home. no way having to prove that you could actually afford it. And of course, when the housing crisis actually entered into the July of 2006, home sales dropped. So we're looking at, yes, there is an impact of rising rates on housing with home sales actually dropping. So if we look at changes when interest rates rise by more than 1%, just looking at this point in time, the increase went 2.38% to the final rate of 9.2%. Now we're not talking, the prediction is not not that we're going to see 9% interest rates on mortgages. That's not the prediction. The prediction long term was that we're going to see around 5%, back to 5%. Interest rates have been historically low since coming out of the housing crisis. But we can all who lived here a period of time and had owned a home. I can remember my first home that we bought. I had one of those flexible adjustable loans. Second home, I had an 8% interest rate, and I got that home in '96. So around this point in time, this tells you kind of where we are historically. So we're not going to see a jump like that. That's not the anticipation. So again, looking at this here, we're seeing that as on an average, home sales drop, but not outrageously. Maybe 2% on average, again, the anomaly right here at 14%, but maybe 2% drop with interest rates going up more than 1%. So maybe a little bit of softening in the actual sales with rising interest rate, right? Home prices continuing to rise, but not a massive 10% drop anticipated historically. So the difference here also is to look at during these times in which we had the increase in home prices, we also had inventory. That's the big difference. We don't have inventory. We have half a month of supply. If we're good, maybe 3/4 of a month of supply. We don't have inventory. Back in these days, we had 4-5 months of inventory. That's a difference. It's a big difference. So the higher short-term interest rates will push up mortgage rates. I expect some of the impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred over the past few weeks. And this is coming from the Director of Forecasting at NAR. So we'll see if lower inflation actually happens. That's the anticipation. I know we've had a huge jump in inflation, and that's impacted an awful lot of stuff. History suggests that while interest rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analysis shows that a 1% increase in mortgage rates results in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. So we expect home prices to continue to rise, but at a lower rate. We had talked about how once the pandemic hit in February of 2020 to February of 2022, the median home price of a bin single-family home on less than an acre rose 67%. That is an amazing increase in the value of a home in bin. The anticipation is home prices will continue to rise, but at a lower rate. While rates rising and expected to rise through 2023, it makes sense to obtain a purchase or refinance mortgage if you are in good standing now rather than later, and that's expected. We are expecting rates to continue to rise. So the housing update. We keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. That's the truth. We are seeing this. Listings hit the market, and there's a slight change in some of the stats here, though. That's interesting. So this is the buyer traffic index across the country from February of this year. You can see the entire country is really strong, really, really strong as far as buyers looking for homes. But in contrast, this is the seller traffic. We're in a weak market for seller traffic, very weak. in all these parts of the Midwest, New Mexico, this part of New England, there just are not homes to buy. This is a big problem, which is why the active listings, this is where listings are, the active monthly listing counts. This shows where we are, and we finally had a slight uptick from February to March, a slight uptick across the country. But look at where we are in March of 2022 versus March of 2021. We're still 100,000 homes less across the country. So this is a really challenging thing for so many of us to be dealing with buyers. Now, more industry insiders are throwing out their previous forecasts and replacing them with more excuse me, bullish short-term outlooks. Indeed, some experts say that the 2022 spring housing market might go down as one of the most competitive on market. We're seeing that. Pending home sales. This is the historic healthy level. This is over the last 6 Februaries. This is where we are across the country, seasonally adjusted rate. And I'm whipping through the stuff really fast. I'm really sorry about that. But this shows you there's massive demand. This is showing us in 2022 showing time where we are over the last 5 Februarys. There's more buyers out there looking for homes than have happened over a long period of time, even pre-COVID. And price appreciation acceleration. We are still seeing price year-over-year increases. In January, we had talked about that across the country, a 19% increase in home prices from the year before. Last fall, we observed that home prices, although continue to rise quite sharply, have begun to decelerate. Even that modest deceleration was on pause in January. The 19.2% year-over-year change for January was the 4th largest reading in 35 years of history. So again, we're anticipating home prices to continue to rise, but at a lesser rate. But there's anomalies. January is one of those. And these are the last things we're going to show. I'm going to send all these to you guys. This is something you can use when you're talking with people. More new listings than active listings. This is active listings. These are new listings. This shows you that as soon as new listings are hitting the market, they're being snapped up. The change started happening here in March. Finally getting new listings that are not being snapped up. Again, this is national. This is national statistics. This is not necessarily our local market. This is the reason why we have so many problems. Years ago, when the Oregon Realtors convention was in Sun River, we heard Lawrence Young, the chief economist from NAR, was there, and he was saying how during the recession, 3 million housing units that should have been built across the country weren't. And that happened because lending practices pulled all housing from being financed. And that's the issue we're dealing with. We've had 14 straight years of below construction across the country. 14 straight years. We had more homes being built in the 1980s and 1970s than we've had in the last 15 years. That's the problem. We don't have enough homes for the number of people in this country. So one thing to think about also, though, is how do we deal with inflation? Home ownership has been a hedge against inflation. Home price appreciation versus inflation. We're now in 2021, we are at 6.8% inflation rate. Home price appreciation was at 18%. So when you put your money into housing, it is a protection against inflation. Also something to think about here in 2022, if you can find a $360,000 home, maybe Madras, that's a great place to go. In 5 years, we can expect you will have gained $96,000 in wealth based upon equity just being grown in your home. And here's again the home price forecast for 2022. So here's the average of all 7 forecasts is 6.7%. These are the top gurus as far as economists who predict things. and everyone still expects home prices across the country to continue to rise. The most bullish on it all is CoreLogic. The least is Zelman, but again, on average, 6.7% is the expected increase in home prices over the course of the year. Any questions on this? Any thoughts on any of this? How about haves or wants before we're gone? I know I've gone long here. Haves or wants from anybody before we go? Yeah, Kelly?
I have a new listing coming on in the parks. It's incoming soon right now. It is 1950 square feet, 3 bedrooms, 3.5 bath. The main house has two bedrooms upstairs, both with their own suites, including that one of those is a master and like a little office space area. And then there's above the garage another 600 square foot. It could be a bonus room or a 3rd bedroom. It does have a private entrance. So it may not fit for smaller families, but could fit for other options. And it's priced at $775, and it should be on in a few hours.
Awesome. That's exciting, Kelly. I bet you're going to sell that quick.
I think so.
Hey, Bob, did you have something?
Yeah, I have a client, they purchased a home here in Bend, and they're moving from Colorado to here, and just didn't know if there's any recommendations on moving company.
Any thoughts, guys? Anyone have a moving company for someone moving from Colorado? Angelique?
Oh, hi. Bob, I might actually have somebody. I'll send you his name. I don't know if they'll be the right fit or not, but he's a great guy and he does moving and he's super trustworthy. So I'll text you his info.
Perfect, thank you so much.
Yeah, you got it. I do have a pocket listing right now that just due to circumstances and family circumstances, they cannot, we can't go live in the MLS until June, but they've already bought a new property. They're all up for selling right now, and it is on Hunnell Road, so it's in Tumalo. It's on 21.66 acres, 17 irrigated acres. The main house is over 2,600 square feet. It has a 2,400 square foot partially finished basement under the house, and it has a 6-car garage. On the other side of the 6-car garage, it has a guest house ADU, 2-bedroom, 2-bath with a kitchen. It has a huge ranch shop building, has an RV garage, another 5-car bay workstation. It's fenced, comes with wheel lines, a 1-acre lined pond, huge mountain views, and it's listed at 2.2 million. So if you have any questions, I could probably get somebody in. We just would have to really coordinate it with the sellers. So that's all I got.
Yeah, sounds like a great listing, Angelique. I'll make sure for people who are not here, I'm going to put this out because I know we sent out to everybody, and I hope everyone got that yesterday, a flyer about this. So everyone should have gotten some information. Again, it's an in-office listing right now, so we can't share it with the other brokerage communities. But if you have a buyer, I know Angelique would be thrilled to talk with you about that. Anything else? Anybody? Sheila, did you have something? No. Catherine, did you have something?
Yes, hi. I have a client who is looking to buy a home here in Central Oregon. They like resorts. They're going to get their whole family to buy this place. They love Brasada, but any other resort would work well too. They're looking for up to 1.5 million for a multi-family type situation.
Would they consider Sun River?
Possibly, yes. They want to be in a community that has the pool and all the recreational facilities.
Yeah, I know Jackie has a new listing in Sun River coming on, Jackie and Shireen. And you might also want to connect with Lisa and Grace. They live in Brasada. They are licensed with us, and they are focusing on the Brasada area. They may have something coming up soon, so you may want to reach out to them. They may have someone who can help you or have some thought.
Great.
Thank you.
Catherine, it's Angela. I just saw in Central Oregon Haves and Wants yesterday. I think somebody had posted that they had a house in Brasada coming soon. So it looked nice. You might want to check it out. I don't remember what the price was.
I saw that. Yes. Great.
Yeah.
Thank
Yeah, thanks. Yeah, anyone else here? Sheila, did you have something? I'm just looking to see if anyone has their buttons, unmuted or anything like that. Okay, if not, we're just going to have to, I know we went long here, I apologize for that, but I had a lot of stuff to cover. Next week, I'm going to have continuing education. Brian Ulrich, who's going to be, he's a lender who does reverse mortgages. He's going to give a presentation for CE credit. It's been a few years since we've talked to Brian before, because he presented one of these same classes, but he has some new updated material. And reverse mortgages for reverse mortgage purchases can be a real valid way of purchasing a property for people who are older, and it's an option for a lot of people, and it's CE credits too. So any other thoughts on anything before we go for the day? I hope you guys can make it to our Thursday out of COVID get together at Stoller Wine tomorrow from 4 to 6. Have some wine and some snacks there. We'll be at the upstairs area. I hope you guys can come and go we'll be there. The staff will be there at 4 o'clock. So hoping to meet you all. It's just nice to see people again. Going to Salem, like I said, it was really fun to see people's faces. I missed seeing people's faces. And hopefully you can come tomorrow as well to that. And if nothing else, I'd like to say goodbye to all and talk to you soon. Thanks so much. Oh, Emily's going to be gone also starting next week for a well-deserved vacation. She's going to be leaving the 19th. So if you need Emily to do anything for you before she leaves, please get it to her before the 19th. I will be covering her, as will Brittany. So if you need help with anything after she's gone, please see the two of us. I'm sure we'll be very busy. So we'll talk to you soon. Okay, bye-bye.